Hey Facebook family, this is Jerry Heiderscheit with 1 Minute Mortgage Pro. Going to run through a couple scenarios real quick. Want to do a renting versus buying comparison with some hard cold numbers that I think might be a little bit eye-opening. Often we hear that renting makes more sense than buying. We hear that on occasion, and I think on a rare occasion that is accurate. But here are some numbers to consider. We're going to use some conservative numbers, and I'm going to do my best to keep the video short. I do know that's going to be a challenge, mainly because this is a lot of information. I'm going to do a smaller loan, $100,000 loan, and if you need me to do a specific amount at some point, feel free to message me. I'll do a larger one at some point. We'll get into like a $300,000 or $400,000 home at some point as well. But here's what we're going to do. So we're going to look at renting. Here's the renting numbers, and then right below it is the buying numbers. So we're going to look at someone who's renting at $800 a month. They're paying $20 a month for renter's insurance, and the expected annual rent increase percentage is 4%, which I think is kind of conservative at this point. The buying scenario is going to be a $100,000 home. The funded amount is going to be $97,000. That means that there's a $3,000 down payment. The interest rate is going to be 4.25%. It's going to be a 30-year fixed rate. The closing costs we're going to estimate at $3,500. The homeowner's insurance for a year is $1,100. The property taxes for a year is going to be $1,500. The homeowner's maintenance, basically, to maintain the property, we're going to figure $800. Again, I'm trying to be kind of conservative here. Years before selling, so this means it's set at 7 years. The average homeowner currently keeps their house for 7 to 10 years right now before selling it. You know, maybe their family got too big and they needed a bigger home, or whatever the case. The average right now is between 7 and 10 years, so we're going to keep it conservative and say they only kept the home for 7 years before they sold it. The home appreciated at 4%, which I think it's actually closer to 7 or 8% right now is the appreciation rate, but we're going to go with 4%. The cost to sell the home, we're going to say 6%, which is what they paid the realtor, and then the federal state income tax rate is 25%. So when we calculate this, and I'm not going to get into all of these numbers. Obviously, you can come down here and see buying versus renting and kind of how this all breaks down, how much was saved in buying, the tax breaks, and all that kind of stuff. But the number I really want to point out is right here, $56,249. That is the biggest difference right there. 7 years. In just 7 years, the equity and the tax breaks and everything combined saved you $56,000, and this is just on a $100,000 home versus someone who pays $800 a month for rent. I'd be happy to play with these numbers for you a little bit more, but hopefully this is a little bit eye-opening. So again, Jerry Heiderscheit, 1 Minute Mortgage Pro. Feel free to message me or give me a call. Love to work with you. Thanks.